So Dutch interest is basically you start
You pay
charging
from day one,
the full amount.
the full amount.
Okay.
You start paying interest on that.
I didn't know that. I don't do construction loans. I haven't got to that
Yes.
point yet. Did you know that? Drop a comment below. Let me know if you knew that or not.
If you buy a lot, I strongly suggest investors to find a way to raise money or use their own money to buy the land, because they will not going to be tied up to a loan that only pay for a loan that they cannot even use, because they need to go through the permitting process, obviously survey, site plan, architectural plans. It's really even more important to have a higher credit score, because you'll have the higher leverage. And also 700 is kind of the border where after 700 good things happen, and kind of you have.
Hello and welcome to the Dream Start On podcast. I'm your host, Edgar the Connector, and today we have Julian. Say your last name?
Rizov?
Rizov.
Yes.
Cool. So we are in Arizona today for an Owners Club meeting, and this guy does lending, all types of lending. What types of lending do you do?
Started lending about 21 years ago.
Wow.
Started with a conventional lending. And about 12, 13 years ago, added the investor loans into the services. It's the hard money lending. This is the fix and flip, bridge, new construction, short-term rental, long-term rental, DSCR loans, DSCR for co-living properties as well. And about 2 years ago, added the commercial loans as well in the services. So we can help with funding multifamily, different type of commercial class assets like office, retail, industrial. We can do businesses as well. So pretty much trying to be a one-stop shop for any investors who need that.
Yeah, that's what I was about to say. One-stop shop for everything. So you're doing your hard money lending for fix and flips. Do you base hard money lending on their personal credit, or is it the deal? How's that usually work?
No, actually, even though there are funding sources that will lend on the deal itself, on the asset, and on the deal structure, I strongly recommend to have a minimum of 660 FICO score when you try to get a loan. And the reason is you will get a better rate, better leverage, better terms. So it's worth it to have at least 660 FICO score to get better terms.
Okay. Amazing. Good information there. 660 to get better terms. And then the higher, the better the terms, right? So
yeah, but that's for fix and flip,
right?
Bridge and new construction. For DSCRs, however, it's really even more important to have a higher credit score, because you'll have the higher leverage. And also 700 is kind of the border where after 700 good things happen, and kind of you have better rates and the highest leverage. And that's why it's beneficial to have the higher credit, or actually bring another partner or sponsor who can actually help with accomplish those rates.
Okay. And when you're talking about sponsor, you mean not the person himself doing the deal, but somebody else that has a good credit score to be able to use their credit history?
Yes. So basically, if for whatever reason your credit score is super low and way even outside of the border of DSCR loans, then probably it's better to offer something to somebody to partner up and who can become a guarantor on the loan.
Okay. Excellent. Good information there. So DSCR is mainly for investors that are buying properties that they're not going to live in, right? You can't.
Absolutely. All those loans are business purpose loans, and they are not allowed to be used as a primary residence or second home or any of these combinations. Definitely for DSCRs are for rentals, for a long-term rental strategy. Fix and flip bridge, those are usually 12 months, 6 to 12 months short-term loans. Construction can be all the way from 12 to 24 months in order to allow you to finish the project. That's pretty much different loans
The terms for them.
use.
When if somebody does buy a DSCR loan and they end up liking the house and moving into it, have you had something like that? That they get
Yeah,
kicked
actually,
out?
that's a house hacking, and even I have people who come and say, "Hey, we fixed that property, and it's originally idea was to sell, but we actually like the house, and we actually want to move into the house." The best part is that I actually can do a primary residence loans too,
Okay.
because I'm still licensed. And actually, I help them to use to move the property from the LLC to a personal name, and if they qualify for the conventional loan, then we do conventional loan using as a refi using the current value,
Okay.
not the amount that they bought it a year or so ago.
Right. So the current market value, ARV value.
Yes.
Okay. But you still have to do an appraisal for that.
Yes.
Okay.
But it's beneficial is that they actually already added value,
Right.
increase the price, and now instead of need to do down payment, they actually use the equity as a down payment. They don't need to come up with any money. Most of the time, we're able to roll over the closing costs in, and they actually have nice 80% loan
Okay.
with no PMI.
Awesome. No PMI. No. That's
But
mortgage insurance.
private mortgage insurance.
Private mortgage insurance. Yeah. Do they have to have the DSCR loan for a certain amount of time before they can switch over?
No. And most of the time, those are people who actually bought it as a fix and flip and got a construction loan as well. And they finished the rehab and then they decided to use it as a primary residence. DSCRs, I don't have many clients that did the house hacking through DSCR loans, but definitely it's possible. Same way.
Okay.
But I have a lot of people in new construction house hacking that they actually bought the land. I financed them with the construction loan, and then they actually wanted to move in. We moved the property to a personal name, but we of course do the pre-qualification for conventional loan way earlier to know that that's not a problem.
Okay. So if you got a DSCR loan and you're moving into the house because you like it, your wife likes it, or something happens that you want to stay into it, reach out to Julian and get you switched over to a conventional loan and maybe not have any money out of pocket because you got it at such a deep discount and you've put enough value into it that you're able to maybe cash out or maybe just go either zero out of pocket or maybe very little out of pocket.
Yep.
DSCR loans what's your loan to value usually?
We can go up to 85% loan to value, which is pretty good. It's, of course, we need to make sure that the DSCR ratio is supporting the payment and cannot be below the payment, the actual payment. Otherwise, we need to go down to with the leverage for the loan, but we can go up to 85% if the DSCR ratio is 1 or above.
Okay. And what you mean by the ratio is if the house rents for, the market says it can rent for $2,000 a month, that your payment
cannot be more than 2,000.
Okay. So 1-to-1 basically.
Yes.
1.0. Okay.
Yep.
And then, so 85 is the max, and that I assume is based on very good credit.
740.
Okay.
FICO score and up.
And then your average loan to value is 70% or?
No, average week 75, 80.
Okay.
80% is pretty awesome. Pretty usual, but of course, if it's a cash out, we can still do 80, but it's only several lenders that are doing that, and it's really the interest rate is quite high for that 80%. So that's why majority of the time the cash out refis ending up around 75%.
Okay.
Or less.
Construction loans. Tell me a little bit more about that. Is that completely new construction or is it a demo construction?
Could be both. However, if you buy a lot, I strongly suggest investors to find a way to raise money or use their own money to buy the land. because they were not going to be tied up to a loan that only paying for a loan that they cannot even use because they need to go through the permitting process, obviously, survey, site plan, architectural plans, then apply for permits. And in some cases, I saw investor who actually had a 10 months of process to getting the permit, and their loan is only 12 months. So now they didn't even use the loan, but the loan is over. So now it's very expensive to start over and revise and all kinds of stuff. So that's why it's better to buy the land, find a way to buy the land. Doesn't matter if you use PML, private money lender, or somebody else's money, or borrow just for the land, or use your own money, but then have all the time, enough time to obtain the permit. And in the meantime, we can work on the loan, right, to be approved. And then as soon as you get the permit in hand, we can close the very next day. Now that way you have the full length of the loan to use for the actual construction.
Okay.
And then have a time to sell.
Great advice there. That way people are using their loan for the time that they have it instead of killing a bunch of it trying to acquire the land and get it ready. So what happens if the term does go? They go for 12 months and they get to the 12 months and then
obviously need extension. Extension costs money, but yeah, definitely extensions are available. Pretty much 6 months extension is usual, and hopefully within that 6 months, the house will be sold.
Yeah, so they still go from 12 months. If they take 10 months, they only get 8 months instead of the 12, even with the extension. And then when they do an extension, does that basically kind of like starting the loan over again? What is?
No, it's just pay a fee to extend the loan, the same terms.
Is it usually points that they pay for extension?
Yeah, it's a 1 point every 3 months, something like that.
Okay. Interesting. If you don't know what points are, points is basically 1% interest of the total loan value.
We try to prevent that by advising clients to not get a loan before they have a permitting end and get construction started.
Okay. Yeah.
Of course, we always look for a good institutional construction loan, because those loans are non-Dutch interest. And non-Dutch interest is when you don't pay interest on the money that you didn't redeem or receive.
Okay.
So, and for the new construction, it's crucial, because basically if I own the land and I spend all the money for the soft cost, I usually end up getting 100% of the construction loan, which means there is not really any money I received yet, and it could be another month before my first draw. Mm-hmm. So I'm not paying on the full amount, and maybe I have a draw of $50,000 the very first month. My next payment is on the $50,000, not on the $500,000 full loan amount. And that's very, very important, because otherwise it's ending up very quickly, and that's kind of eating all from your profit in the end.
And that's called a non-Dutch loan?
Non-Dutch interest. Non-Dutch interest.
Non-Dutch interest. So Dutch interest is basically you
pay from day one.
The full amount.
The full amount. You start paying interest on that.
I didn't know that. I don't do construction loans. I haven't got to that point yet. Did you know that? Drop a comment below. Let me know if you knew that or not. If you didn't, send a thank you to Julian for sharing that information. That's great to know, because that could easily make a big difference in your fees.
Big difference.
And then if for some reason you're one of the super constructors and you use less than your balance, then you're saving a little bit there on interest.
Absolutely. Okay. Or if you can support to even prolong getting draws. For example, with all our suppliers, I'm building houses myself. So with all our suppliers, we are net 30 or net 60. So basically, we don't need to pay immediately after we buy the materials, or even with the trades that do the work. Then we prolong a little bit that, and we are paying as late as possible. So then the interest start clicking at the moment receive the draw.
That's great advice. Cool. That's something for me to know when I do get to that point eventually.
Yes.
So you're doing construction yourself right now? Some new construction?
Absolutely. We do custom homes,
Okay.
building, and also we are building new construction for rent, and we refinance with DSCR loans and keeping as a rentals and Airbnbs, midterm rental, building the first co-living property, 6 bedrooms, 6 bath in Atlanta. And this will be refinanced with DSCR loan once it's ready, and we'll keep it in our portfolio.
Fantastic. So Atlanta, new construction, a big mix of different types of property exit strategies for that.
Yes.
Atlanta's got a good part of the community that I know is there. The other Edgar Vargas is out there. Shout out to him. Abraham, Gray, and so many out there.
They're all friends. So
cool. How many properties have you already built from ground up?
So far 16.
16. Wow, man.
Yeah, but we're building 5 right now. Additional 5. So
awesome. And are you partnering with more people with these, or is this mainly you and your crew?
I have some partners sometimes, and some projects are ours, some projects are with partners.
Okay. Are you looking for more partners to do ground up construction in the Atlanta area?
Yes, to some degree, but it's more like partners are usually coming with capital.
Okay.
And we have actually almost in every project we have a capital partner participating with us, and they come help with purchasing the land, soft cost, and everything. And they're really passive from that perspective, and we finish the project and they participate in the profit sharing, but also they have, we actually structure creatively, and I like personally the structure that they're getting percentage of the profit, but no less than certain percentage. So in other words, if I screw up with a budget, with a construction, if anything goes wrong, it's the minimum amount what we agree on. They receive the first money before we split.
Nice.
So
if you're looking to invest, hey, Julian's got a good deal there for you. He's going to make sure you get your percentage from the deal that you work out. So you're looking for capital partners. How much percentage of the deal you need? 30%?
So I actually stop those individual projects invites for investors. I recently set up a small fund of $3 million.
Nice. And
that's actually very, very lucrative for people who wants to get into real estate investing pretty safely at this point, because they're participating in a fund, and everything we do, not only one project, but any project we do. And we are 2 partners with that fund. We are 50% partners with the investors, and we split profits, but we're actually using institutional capital as well to blend with fund money. So in other words, cash on cash return is exponentially high in the end, because we only cash on cash returns are exponentially high because we're using only fraction of the money for the deal, and we borrow very inexpensive institutional capital.
Yeah,
and that's blend make it the magic, and we have a pretty good returns.
Okay. But you're using the platform fractional as well? Or?
No.
Okay, just fractional.
It's a real fund.
Okay.
A real equity fund.
And does that fund have to be accredited investors only? Or?
Okay. The way I structure it, I thought of structuring accredited investors only, but I decided to do it 506B, which is accredited and non-accredited investors as well.
Oh, nice. Open doors.
Open doors for more individuals who might have the money and not being accredited investors at this time.
Right. Okay.
So our minimum is 50,000. So, however, people can invest with retirement accounts, with self-directed 401k, even traditional IRA if they self-directed traditional IRA
Right.
as well. So, and it's pretty lucrative to multiply on a yearly basis. We do 1 year, every year, once a year distribution on profit. So it's pretty.
Okay. So I assume that fund is closed right now because it's fully funded, or do you?
Not yet. No, we just finished the paperwork and we just really opened about 10 days ago. So it's really
Okay,
open.
so you got time. Hey,
Oh yeah.
when this releases, it's still going to be open unless you got all the money really quick in a few days. So where can people find you to reach out to fund if they have money to get into the deals?
Yeah, the best is to send an email to my lending email. It's Julian, Julian, at deal, DEAL, fund, FUND, 360.com.
And I'll make sure I put that in the description below as well. So send them an email to invest to see. And is there a place you have your portfolio available to see? Is it
Absolutely. I have the whole presentation. I'll be happy to
share it with others.
And present the opportunities and give way more information on that.
Fantastic. Yep. You'll be able to see co-living, Airbnb, short-term rentals, midterm rentals. So if you want to get into it, it's one way just to be a fly on the wall and see the actual process and be a part of it. Invest your money that's sitting there and be able to get higher returns. Not guaranteed, of course. We're not financial advisors. This is for entertainment purposes. But you'll be able to have a very good opportunity here with Julian. What made you branch out to new construction instead of just focusing on the lending?
I started 15 years ago with fix and flips. I did over 250 fix and flips so far. But when I moved to Atlanta from Las Vegas, I was 20 years in Las Vegas, but moved to Atlanta about 6 years ago. I saw the opportunity to find a good price lots that actually allowed to build nicer homes versus trying to rehab very old homes, and no matter what you do, they never looks new.
Yeah.
So I really like the new builds. We have a design team in Europe, and all the designs are done in Europe, and I think we do a very nice looking properties.
Cool. I gotta check that out. We'll put the link below as well so you can see his properties. I think you have some on your website or no?
Yes, I don't have the website specifically for that, but I have all the links in the presentation.
Okay.
For the fund. So, but yeah, definitely we'll have that information provided. People who are interested to see more and learn more about us.
Excellent. So European design, do they do more of an American design or is it more of a European design?
No, I mean, I'm saying we are using artists and designers from Europe, but it's definitely in accordance to where we build and what type of product we build. Right. Because we build different products. We build traditional farmhouse models, but we also do modern houses as well. Then we do other types as well. So it really depends on what type of product we build. So we do actually design according to the product we build.
Right. The market and things like that. Okay. Are you from Europe yourself?
I'm from Bulgaria originally. I moved about 26 years ago.
Okay.
To the United States. So
awesome. Is that where your designers are as well in Bulgaria? Okay.
Yes.
Cool. Be able to give a little bit of hometown.
Yes. It's actually a relative, so that's why it's easier.
Oh, fantastic. Keep it, be able to share the love, share the wealth, that's fantastic, man. That's very good of you to do that. A lot of people forget their roots and, just try to move a different path.
Yeah, of course. It's, we can have a lot of ways to say what we want and to have a little bit more personal touch to to the design instead of just using an agency or something.
Yeah, I like it. That's good. So with your new builds doing Atlanta, do you need any more construction workers or more contractors?
I actually just hired an in-house builder for all our future builds, and we'll have the same for the renovations. That's what the fund will actually perform: the buying, fixing, and flipping properties, or buying land, building, and selling. So we had to set up crews to be ready to go.
Okay.
We're thinking to do a good amount of projects every year, like probably 40, 50, 60 a year. So
scaling up. Fantastic.
Yeah.
Inspiration there.
Yeah.
So you have that going to DSCR. Do you land deals? How are you sourcing your land deals right now to be able to build on?
All kinds. So from MLS to wholesalers, of course, pocket listings from realtors. The competition for the land is way smaller than competition for buying properties, because a lot of people don't know what to do with the land, how to underwrite, how to evaluate the deal, and that's why it's still easier to buy lots versus properties. But we are using any
means. Okay. Do you have a specific area in Atlanta that you're looking for land right now, that if somebody sees it, they send it to you?
Actually, it's everything north from I-20 and up. Even though we might have a use for even in the south, but we prefer north. But we have a wide range of area, because different areas we can build different houses for different things. If it's custom home for $1.5 million, it's one thing, but we also build $300,000 house for co-living, or $600,000 house for converting to Airbnb.
Yeah.
So it's really depends. But based on the location, based on what it look like, what the land look like, we can design a project to use. Because we have a variety of different exit strategies, we can accommodate quite a bit different.
That's excellent. I like
areas,
that.
But yeah,
I like that you have a good wide range and you have the capability to be able to work on multiple exits.
Yeah, so we can even do a small multifamily as well. Let's say we can do 10 townhomes or something like that, if the land is capable or designed for that, or is zoned for that.
Okay.
And it's under good price, then we did a couple of good subdivision, small subdivisions, like what I'm saying. Subdivision means recently bought a house with 6 acres, and we actually subdivide on 3 lots of 2 acres each.
Nice.
So now we're building 3 houses on those 6 acres, but those are nice custom homes of $1.5, $1.7 million.
Beautiful. That sounds like they'd be awesome. Nice 2-acre lots.
Yep.
Completely brand new construction. Your neighbors are going to be really nice.
Oh yeah, it's a nice area. The area where I actually live.
Yeah.
Next door to me, it's in Woodstock. So.
Okay.
Desirable area.
Amazing. And the land that people are going to send you, does it need to be shovel ready, or should they check the zoning?
No. We can do all this.
Okay.
No problem. We can come back and say, hey, we can pay X amount of money for the land. But yeah, we have a good team to underwrite, a system to underwrite everything very quickly and determine if this is something that will be suitable for any of our strategies that we have.
Awesome. He's got a wide net. He's got a team. The biggest thing is getting that team together to be able to help you scale and expand and just have those opportunities, be able to take them on. Do you have a buy box somewhere that people can find it to send it to you? Or do you want them to email you the leads?
Yeah, I have a buy box, but yeah, definitely. There is a specific email that I'm using for any
land leads or
land or even properties, because we still do
the fix and flip. Okay.
But criteria for a fix and flip is 1985 and up, 3-bedroom, 3-bath minimum, and minimum of 1,200 square foot. The land, again, it's really depends. It's a wide range, but we can easily determine if it's okay. Now we have a deals. The email is deals@jvplv.com.
JV
P as in Paul, LV.com.
PLV.com. Okay, I'll make sure that's on the bottom of the description as well. Hey, give us a thumbs up, subscribe to the channel. It's free. Drop a comment telling Julian thank you. He's given us so much good information here. There's more to come. Like most entrepreneurs, I don't sleep enough. So the hours that I do sleep need to be of better quality. The 8 Sleep Pod, it has been a game changer for me. Perfect temperature all night, less snoring, and I actually wake up refreshed. And my wife does as well, which is a huge plus. Happy wife, happy life. You can try it through my affiliate link below. Now we go back to the episode. So with one thing that I haven't done, I'm still a solopreneur. I partner with some people, but I still haven't been able to take on the responsibility of hiring somebody or putting the team together. What made you break out into that to be able to get your partners to help you with the fix and flips and hire people to do that work?
It's very difficult to do everything by yourself. So definitely a good team is going a long way. And that's the only way you can predictable on a consistent base produce results. That's for sure. We have a pretty solid full-time lending business going and also full-time real estate investing business. So it's really need a good team to accomplish good results with those two businesses. So
yeah, to go from lending to the fix and flip construction.
Yeah, we're actually looking to buy a business as well, and we will be probably looking at some construction business, remodeling, or home services as well.
Okay. In the Atlanta area?
In Atlanta, metro area, yes.
Okay, fantastic. I need to get to the point where I'm start hiring. I need an assistant for sure. Because what does Dan Martel say is if you don't have an assistant, you are your own assistant.
Yes.
So one thing with going back to loans, construction loans, I've heard people saying that they can go from construction straight to like ready to live in. I don't know that much about it because usually construction loan, once you finish your construction, you change it to a conventional loan or a DSCR loan, right?
Those are people who originally people who find a piece of land and they want to do construction loan for it, but they know from day one that they will be living in a house. So they usually go with construction to permanent loan.
Okay, to permanent.
One-time close. This was very lucrative back in the days. To me, that's not a good strategy.
Okay.
And I actually teach people a different way. Even if they know that they will be doing house hacking. The reason is if they buy the land, if they set up an LLC, I can, even if they are first timer builders, I can help them get a construction loan and create equity. And then the rates are not low today, so we don't need the construction to permanent to protect. In a year the interest rates might go up, and we need to have the rate set up today.
Yeah.
So lock today. So that's why now I can get a construction loan to them. They can build a house. They can create all this equity. Usually it's 25-30% if they're doing it right with the right structure. But in the end, they will have a 25-30% down payment, and we can do the conventional loan at that time.
Okay, excellent.
And it will be refis, no stress.
There you go. So if you're thinking about getting a construction loan for a property you planning to live in, reach out to Julian first to get some expert advice on the best way to go for your situation. Because everybody's different, right?
Yep.
If what's one thing that most people miss when they're doing their loan documentation?
Oh, that's a very good question. It's unfortunately we're witnessing a lot of investors, even investors who are experienced investors on paper, it's still very far away from knowing what exactly needed for the loan. Most of the time, those people missing entity docs executed correctly. We receiving operating agreements without signatures, which is
I did that. Till excited. I was like, oh, okay,
invalid, right? So they don't have the proper setup, and then especially their partners. Oh, okay, we are 50-50 partners, but then only one person has a good FICO score or experience, and then, oh yeah, but if you are 50-50, then it's...
Well, you got to run both the credit?
Yeah, so in order to not happen, then we need to do amendment on operating agreement and have the co-borrower who will not be into participating into the loan for various reasons, then they need to be less than 20%.
Less than 20%?
Yes, less than 20%. They don't need to guarantee the loan. They don't need to be the guarantor, and taking in consideration their FICO score as well. So
that's brilliant advice there. So listen to that. If you're going to partner up with somebody and you're going to get a construction loan or any type of loan for...
Even fixing them, yes.
Yeah, any type of loan, if one partner has a way lower score and you're 50-50, the suggestion is one, amend your paperwork to that partner is less than 20%.
Yes.
And or open up another LLC where they're a lower percentage and then do the loan that way. Is there a minimum time they have to have their LLC open?
No, not a problem at all.
Okay.
Can be tomorrow.
Yeah. Excellent. That's going to save you a lot of points, interest rates, and make your documents easier if you only have to do documentation for one partner instead of both partners.
Yeah, we provide all the advice and kind of recommendations and calling hands as well to many investors to do it correctly and prepare to do the right way. So.
Excellent. I had an issue. I don't know if you've run into this. So I did a credit sponsorship in my LLC. I was a managing member because I have it through a holding company, registered agent. And the DSCR lender said, no, you need to change it to where you're manager. So I had to pay to get it amended to change it to manager. Not managing member. They wanted to see a manager. Have you run into that?
Yeah, no, you can still be a managing member, but you can be with 19%, right? You still can be a managing member, but not participating in the loan. So, but...
No, this one was different. I was 100% ownership on the LLC.
Oh, yeah.
But they wanted me to change my title from managing member to manager.
For what reason?
I don't know. They delayed me for a month so I could go get the amendment.
Yeah, you were working with that wrong.
DSCR lender.
Inexperienced lenders.
They were bad because then my time passed, like the 90-day pull. So they re-pulled it. They dropped me by 4 points and I had to go to 70% loan to value instead of 75%.
Yeah.
But he won't do that. If he does that, you let me know and we'll promote him bad.
Yeah, the fastest DSCR loan we closed in 14 days.
14 days? Amazing.
It's pretty good.
Yeah. That means they had their operating agreement signed.
No, we make sure everything day one, that everything is really in line and everything. But of course, the borrowers were great and provide all the documents on an absolute immediate base, and we were able to close.
Okay, fantastic. 14-day close if you got all your paperwork organized and your numbers make sense. The appraisal, you get an appraisal pretty quick.
Yeah, actually, we, I think with this particular one, we had an appraisal that we were able to transfer.
Oh, nice.
So typical, it's 21 to 25 days on a regular base. But of course, we can do rush if everything is ready to go and the borrower is savvy and organized.
Excellent. And then to transfer an appraisal, I think the appraisal has to be like certified from a certain company.
Yeah, the appraisal need to be ordered by AMC with the previous lender, not like borrower or somebody else just order an appraisal to run an appraisal.
Yeah,
need to be through the appraisal management company, and then we can request the appraisal. Of course, need to be agreed by the other broker, previous lender, to release the appraisal
Yeah.
to the new lender.
Some
But we can use transfers all the time.
Okay. As long as it's AMC American Mortgage?
No, appraisal management company.
Appraisal management company certified, then there's a very good chance you can get it
Yes.
transferred. But sometimes politics between the companies, they don't want to share. That means don't do business with them again.
Yes.
Excellent. Okay. So you lend money there, you're doing construction, you got multiple things going on. Fantastic. Thank you for this. What word of advice do you have for anybody that wants to do their own lending, brokerage, or new construction? Some reason one that you feel.
You need to know a lot in order to be a lender, because it's. I see a lot of lenders, especially from our gator communities, that they don't understand real estate investing, and that's why they don't understand how to underwrite correctly the deals that they are lending on. And then I have several lenders that actually got in trouble, and instead of getting the money back, and the houses didn't sell. So I had to help refinancing the hard money lender because they are in second position. So I needed to help them refinance the loan, the first lien position, after they received the title, the deed, and the keys. And it's kind of it's required quite a bit to be sophisticated lender. But actually, if somebody want to learn, that's the best way to learn is to work with a lender. And we have several people that actually work with us on an affiliate base.
Okay.
And if they want to learn, we can definitely kind of open to provide the information needed to slowly getting familiar and obviously do better as a lender. But yeah, we have affiliation as well, so people can actually make money with us by referring.
I love affiliates. Great. And then what do you need today besides, I guess, more people to come for you asking for loans? What else do you need for yourself or your business?
The main focus today is actually the new fund that we created, and because I really would like to start buying a good amount of properties, and that's why this is the focus. Also, this on the real estate side, the focus on the lending side is that we are working on a lot of automations right now that actually making the process very streamlined. For example, many times the investors goes to a lender, and the lender start asking a lot of documentation before even show rates. So we noticed that a lot of investors don't want to even, they're very slow providing any documentation, or not even willing to provide it, because they don't even know if the rate that they will receive will be suitable to their loan. So now there is a hesitation to provide a lot of information. So that's why we created a different type of system that we have a link that you use the link and submit 8-9 answers of 8-9 questions without providing any personal information. And basically within 24 hours, you will receive a term sheet from us. Okay. And once you like what you see, or we discuss and find a way that these are acceptable terms, then we say, okay, sign the term sheet and let's start the loan. Then we submit a need list, link to upload documents to fill out the application, and we go knowing that we are on the same page, we agreed terms, and we go and close the loan. And that's great, a lot of certainty with the client, the borrowers, clients that say, okay, I know what I'm getting. Let's get this done.
Yeah, that's excellent. That's fast. which everybody wants things fast today, and then they don't want to give a lot of information really quick. They kind of want to get
because it could be no, but it's very fast, right? But by using over 400 different funding sources, really, if it's a no with us, it's really difficult to find
with someone else.
Yeah, or maybe somebody just personal private lender or something can help in those situations. But other than that, we pretty much have all the products available, a lot of funding sources. So we can help a lot.
And what's the website for that form if they want to?
Oh, it's a dealfunding360.com. And if there is a link, apply.
Okay.
Click on apply and answer the 7-8 questions for taking 2 minutes and get a terms. And if you like it, let's move.
Make it simple. So if you're buying a house for yourself, you're buying an investment property, you're going to do construction, you're going to refi. I mean, there's so many different options right there, but it's really easy. One more time, that website is
dealfunding360.com.
Dealfunding360.com. Go there, fill out the questions, and then it doesn't do a credit check at first.
No credit check until way later.
Until you're ready to go with it and you like the numbers.
Yeah.
It's not much easier than that, simpler anywhere else. Julian, thank you so much for all this information.
Thank you for having me.
We'll be reaching out to you for some refis I have with DSCR loan.
We're ready.
And we'll do it. I'm going to be going to dealfunding360.com and we'll do it there. Hey, again, give us a like, subscribe to the channel. It's free, and we will see you on the next one. Later. Catch this next podcast where you can start your dreams and start to own your time the way these other guests have.